Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined by Greg Weldon of Weldon Financial, publisher of Weldon Live, a daily macro market research firm and publication, CTA, and author. Greg, how are you doing on this Jobs Friday?
I'm doing great, Joel. Thanks for the invite. Happy to contribute.
Okay, so we always love to have floor people on the show, and you cut your teeth in the markets initially, working on the floor of the COMEX. Do you have a good floor story for us?
A good floor story. Well, the reason I got my job is a good floor story. I was actually visiting a friend of mine just out of college. I played basketball at Colgate, so I tried to, make my way into the NBA. Wasn't able to do that, and ended up really not knowing what I was going to do. Studied English literature. I'm visiting a friend of mine. It was his birthday, high school buddy, on the floor at COMEX, to take him out for his birthday. And some guy just comes up to me and asks me about playing hoops. I'm 6'10", 275, some pretty noticeable figure. And we struck up a conversation. He was in his 60s, had played at Columbia when it was big time in the city, and we just had a conversation. And as my friend and I were leaving and taking him out for his birthday, I turned to my friend and I said, "This place is unbelievable. I mean, how do you get a job here? You certainly don't go to school for this." And he says, "We got to know somebody." And I said, "Well, don't you know anyone? Is there anyone you can introduce me to?" And he goes, "That guy you were just talking to owns the largest firm on the floor." So, of course, I do a 180 immediately, one of those life-changing moments where you just take action. And I went back and asked him for a job, and he called his son over, and this guy was 6'4" and in his 60s, and his son walks over and he's about 5'8", but with a presence that kind of separates the crowd as he moves, so he never defined size by height for sure. And he comes right over to me, and he looks up at me, and he goes, "Hire this guy." And I got hired simply because I could see over people into the booth and hand pieces of paper into the pit easily. So talk about cutting your teeth, I knew nothing, and was thrown into the middle of mayhem. So it's trial by fire for sure.
And did you ever get stabbed with any pencils or break up any fights or anything? Did you ever get fined? Did you ever get fined on the floor for throwing trading cards?
I never got fined.
Really?
No. Certainly people got fined a lot back in those days. It was very physical back then. You see the pictures of the pit. I mean, Trading Places did a great job. They filmed down there while I was working there. It was actually a lottery to see who would be extras. So a lot of the people I work with are in that movie. And it's pretty realistic. A lot of fist fights. I never was involved. Anyone that's going to try and pick on me would be pretty foolish.
All right. So you're in the pit for a while, and you leave the pit, and you just happen to join or start working for a legendary trader, Louie Bacon. Talk about working with Mr. Bacon, what you learned, and how it shaped your outlook and ways to approach the market.
Sure. Well, coming from the floor, the initial introduction to the market was kind of instinct and feeling and energy, and you really were able to grab all that being physically there and watching and hearing and feeling the energy change when things were happening. Then I went upstairs and worked at Lehman Brothers as a broker and learned that you need to know the fundamental information. What's happening? Clients are calling in. Why are soybeans tanking? Why is the Japanese government bond yield rising? All these questions. You had to know the fundamentals, the backdrop, the stories, the news. I work for Lewis to just take it to another level where it's all about the risk management, all about aversion to risk and managing a portfolio aggressively. It's like playing high-stakes poker, selective aggression and understanding the math, understanding all the numbers around the portfolio management, the leverage, and, your aversion to risk, and then just his pure intensity in terms of wanting to know everything is, a hallmark of success for sure.
All right, before I give you the real tough question, you have your own independent, technical analysis system that you derived. we don't want you to give away the secret sauce, but, could you just give us maybe a few of the key components in there, or, technical formations? Are you a bar chart guy, candlestick? Tell us your approach to technical analysis.
Sure, Joe. Well, as you know, and we were spoken about this before, the technical analysis is a small part of it because it's a blend. It is, digging deep into the data to get the real tidbits, like today's employment number, where, we'll get to that, and I'm going to give you some data details that are really, pertinent. Getting those, and then, creating the fabric of connecting all the dots globally, macro perspective, to come up with a big thematic thought process. And then coming from the bottom with the technicals and hoping to meet in the middle in terms of, refuting or confirming your ideas as, then turning them into action. So the technical analysis, we do some quantitative work, which I use, algorithms I wrote back in the 80s that are very robust. We use the same, it's not optimized or anything. It's really kind of old school, but hardcore. But, we also do straight charting, all kinds of charting analysis. I love the math, so Fibonacci's are important, all the numbers that are involved. We do, a lot of moving average work, a lot of momentum work. So we're looking at that always. But then we have to blend that with the fundamentals. It's not just one-sided. Trading ideas don't come from just one or the other. They might be sparked by one or the other, but they need to be confirmed by everything.
All right, so you mentioned the jobs number, you mentioned the fundamentals here. Before we go to that, just give us your overall assessment of this market. Dennis and I have been in the markets for a long time, just never have seen quite the mentality you have here, buy the dip. In your opinion, do the fundamentals support the price action in the market?
Well, yes and no. Yes, if you want to talk about kind of where interest rates are still, and what the level of accommodations is globally still, then you might suggest, yes, it's still asset reflation environment. But it's long in the tooth, man. It is coming to points where you're starting to see cracks develop. So, this bigger picture is just fascinating to me. I think what's interesting to me, and I don't hear a lot of people kind of put it this way.
I think he just accidentally hung up on us.
I think he did.
All right.
I was just going to get to.
Yeah, here, hold on. Hold on.
Get him back.
Greg?
There we go.
Man, you've been hanging around this Benzinga crowd too long. All right, pick it up.
Yeah, there you go. Where were we? To me, the big global macro picture right here is interesting because it's almost like the U.S. is the risk point here. If you look at what's going on in emerging markets, there are places which are really strong, currencies that are very strong, the stock markets that are very strong. Chile is a great case in point. We've been long Poland as a second derivative of Germany, in terms of their export juggernaut there. And it's been very successful. More recently, we got bullish on China, which has broken out as their economy starts to pick up. The risk point is the U.S., with the expectations for 3% to maybe 4% GDP growth that was supposed to be in place. The mechanics for this were supposed to be in place by the end of this year based on policies that, not only are not implemented, but are not really being discussed, to any real degree of seriousness. That's a problem. And the disconnect there is significant. As we know, we've been able to ride that up, and we were willing to be long the regional banks on the way up. We were willing to be long the home builders on the way up. We were willing to be long in the base metals on the way up. But at this point, it becomes a question of, how much of that is built on expected demand in the future, that right now the risk is it doesn't materialize, or it doesn't materialize quickly enough to satiate the patience level, let alone that the risk here in the U.S. is you have huge profits built up, maybe a misstep by the Fed or some kind of, maybe even monetary event in Europe could cause some profit taking. And when you're talking about stocks like Amazon and Google and, the big cap tech names that everyone owns, whether it's passive investment or specific directed investment, it's owned. People that want to own them. The stocks are priced at $1,000 a share. The volume has dried up. You get a run kind of on those tech stocks in terms of people just thinking they're running to take profit. Starts kind of in a positive frame of mind. That could be a real accidental trigger. So the risk to me is in the U.S., both macro and even in terms of the stock market.
Yeah, but just like something like that we had earlier in the week where, North Korea, launches a missile and the market opens up at the low of the day and closes on the high of the day and keeps going the next 2 days. I mean, it's just kind of hard to, find that trigger. I mean, we've had multiple, terrorist attacks. We've had a Hurricane Harvey flood. I mean, it almost seems like, that this market just, there's nothing. I mean, what could do it? Is it interest? I mean, are they going to do it with interest rates? Earnings were pretty good this quarter. I mean, it's just so hard to find out what that actual catalyst is going to be.
No, I hear you. And people become very preconditioned to buy the dips anywhere below 100-day exponential moving average is a buying opportunity. But I think, North Korea aside, because to me that's kind of a thing that's going to be either just disastrous or you're probably right to maybe shrug it off because it's almost unthinkable. But having said that, to me, it is risk that is centered around bigger picture stuff. And maybe the hurricane could be a catalyst. There's a potential catalyst here. If you look at what the front month gasoline futures have done, if you look at where supplies are, which are large nationally in terms of gasoline, inventories, but a lot of that's actually held in the Gulf, so you might have some transportation issues. But more importantly, they're very low in the West and the Midwest. So any kind of disruption could potentially, play into the consumer, which has already shown some propensity to be a little more defensive. The most recent retail sales report notwithstanding, most of the year has been very poor and subpar at best. So if you get a dynamic where, the consumer is borrowed against the stock market, where the rate of return is diminished, and the borrowing has been unprecedented, and it's directly correlated. So if you get a decline in stocks, the consumer's on the hook. You get a rise in gasoline prices here, even if it is temporary, and we're watching the spring contracts, which are breaking out as of yesterday. They had not broken out. The swaps soared. The front back was in a very high backwardation, meaning, trying to bring inventory into the market by paying higher prices for immediate delivery. And the back months weren't really responding until yesterday. So that's something that has to be watched too in terms of the consumer. Not only that, you link it back to the stock market, the consumer discretionary sector has been an upside leading sector since 2009, since the Fed went to QE. And now it's rolling over, it's breaking down versus the S&P. So if you watch the XLY, if that were to start cracking technically, to me that would be a real warning sign of something more significant than, say, a one-off event out there as a risk, driver.
All right, and also, from your time in the gold pit, you wrote a book, The Gold Trading Boot Camp, that was published in 2006. Give us your outlook on the gold. It's just got to pop up to 1334.50, but we're starting to come in a little bit now. Give us your long and short-term outlook on the gold market.
Sure. Short-term, our target for this move, and we've been bullish, was 1375. You got significant resistance at 1377. You've come a long way from 1205. So, from that perspective, it's, the bulk of the near-term move has probably occurred. From a longer-term perspective, this is a bigger picture breakout, in my opinion. It correlates back to the dollar, which gets back to the whole macro scene, the U.S., and the fact that the Fed is, still projecting 4 or 5 interest rate hikes by the end of next year, where we get an employment number here today which showed a decline in weekly earnings, an outright deflation in weekly earnings. And all of a sudden, the pricing in the Fed funds futures is at 20 basis points between now and the end of next year. Meaning the market doesn't even believe now it's 100% odds of 1 rate hike between now and next year, and the Fed's saying 4 or 5. So that disconnect is a problem, and that relates back to the dollar, the whole macro scene. And to me, the next potential monetary event, particularly with a wobble in stocks, could be another doubling down of the Fed's dot plot. And if that happens, that's a bullish scenario for gold. It's going to be negative on the dollar, which is sitting right on key long-term support. So it kind of deserves a bounce. Maybe there's a pullback in gold, but those are going to be setups for the next big moves. Because if the Fed kind of, starts to talk a little less hawkishly, that could hurt the dollar. It's going to boost gold. Gold's breaking out. Some of the gold mining shares look phenomenal here. Even some of the lower price, the big cap gold mining shares are breaking out with really great patterns. And it's a long-term bull move that goes back to 1999. 12 years up, 4 years down, perfect 50% retracement, now breaking out through the trend line that defined the down move since 2011.
All right, Greg, we're going to let you go here in a second. You wrote your own book, but do you have a book that you can recommend to our audience, perhaps a book on the markets that's helped shape your philosophy and your trading style?
Well, I know that you guys do some technical, systems work. So Perry Kaufman wrote a great book. I'm old school, so most of the books I read are older. But, anything on the psychology of trading is good. I think that, Perry Kaufman's book on building trading systems is a good kind of starting point for neophytes. And, who doesn't love the Market Wizards books? Jack Swagger's an old friend of mine. Those books were really influential on me, telling stories. And, when you talk about kind of mimicking some of the patterns of successful people in terms of being around someone like Louie Bacon, who was friends with Tudor Jones, and just reading about these guys in the books, it's phenomenal stuff. So any of those books to me are recommended reading.
And I guess we kind of already have the answer to this, but if there's one sector out there that, regardless of the recent price action, you're looking out 2 to 3, 5 years, there's one sector where you had to put a good chunk of money, what sector would that be?
Wow, that's a great question. From that kind of long-term, almost demographic, global fundamental situation, I'm always interested in water and biotech, along with nanotech stuff. So, to me, those are always long-term investments where I'd be looking for some kind of idea that makes sense in terms of kind of, being what they call now a disruptor.
All right, and if there's one, I think I know the answer. If there's one sector, group of stocks that you would avoid or just be tempted to lay out a short, what